Hi, my name is Tan Kok Yi. Today I would like to talk about contract for difference. Contract for difference, it also known as CFD. CFD is similar to future contract. It offers European investor to earn price movement without holding the underlying asset. The difference between them is future contract with no considering the price change in the meanwhile. CFD has a function called leverage. With leverage, investor only require certain percentage amount of deposit to buy the contract the same value as buying underlying asset. It helps investor to generate higher rate of return as compared to traditional transaction. However, investor need to maintain a account called marginal account, and if the amount fall below the maintenance margin, the investor is required to put in extra money to push back the marginal account to the minimum margin. Next, we will talk about the risks of trading CFD. There are 6 types of risks. First, price risks, leverage risks, market risks, liquidity risks, counterparty risks, and holding costs. Next, I would like to talk about the investment that I have made. First, I have short the crude oil. They are in 2 types of view. First, in fundamental view, United States has airstrike Syria. It make the oil price go up, but Syria only contribute 0.5% of global oil production. Therefore, it will not affect the crude oil production. And crude oil market is still in an overload position. Therefore, you can expect that the oil price will be going down in the future. Next, in technical view, as shown in the graph, in February, March, April, the price have dropped below the 50 days moving average line. It can predict that in May also have once will drop below the moving average line. Therefore, the price will be going down in the future. Next slide will be the result, and you can see that the oil price have dropped more than $1.7 in a single day. The next investment I have made is long euro dollar. There are 2 reasons. First is the European Central Bank has upgraded the speed of GDP forecast, and it showed that the economy of Europe is growing faster than the before. Next is the United States yield is now in a pro performance, and this will against the USD dollar exchange rate. Next, in technical view, the graph has formed a cup and handle pattern. From the theory, that will have a short-term bullish continuation in the future. And you guys can see that in the graph, the price at April has dropped below the moving average line. Therefore, it can be predicted that the price will go up in the future. As the result, the euro-dollar exchange rate has increased a little bit in the future. My third investment is long German 30. There are 2 reasons why I make this decision. First, Germany 30 is the index that's suitable to hedge as compared to another index. Next, Europe exchange rate has dropped 0.4% in the end of the April, and it is a good news to exporters as they can earn more profit. And in technical analysis, the pattern shows that if the particular decline exists, the price of the instrument might go up in the future. From the next slide, you guys can see that the Germany 30 have go up 12 points in the single day. Another investment that I have made is long BMW share. BMW is one of the largest exporter in Germany. In fundamental view, European exchange rate has dropped 0.4% as mentioned above. The reduction of exchange rate will benefit its profit and sales as well. In technical view, you guys can see the graph has formed a symmetrical triangle pattern. It is one of the famous pattern in technical analysis. After the calculation, the breakout will fall around 90.45 euro dollar, and now the price is around 89 euro dollar. That's the reason why I long the BMW shares. However, I did not manage to gain a profit in this investment due to the deadline of the assignment is near. Although the price has dropped below the price when I went in, the loss includes the holding cost I made was only 837. The last investment I have made is short gold. There are 2 reasons why I make this decision. First, United States and China seems like we're going to have a trade war between 2 of them, but they all know that there is no winner in the trade war. Therefore, they would not go into this bad situation. Next, is international relationship between the Syria and US. As previously, US has airstrike the Syria and the gold price has went up to 1,349.75 per ounce. But United States alliance did not have further action after that. Therefore, it can predict that the gold price will be going down in the future. As you guys can see from the result, the gold price has went down $1.7. Thanks for watching and have a nice day.